All right, welcome to today's session, whereby we want to conclude on intangible assets. And before I proceed, I think I'm going to work on your next assignment.
All right.
And I will be able to give you feedback within your groups, I think within the next 2 days. So by Thursday, I'll give you feedback. But remember that the assessment is on effects of transactions in foreign currency. So that topic, we haven't done it. So on Saturday, I'm going to do it, but I will have sent you the document by Thursday. So maybe don't submit because I want you to submit something that you understand, not to just submit something that you don't understand. So I would urge you to wait, have the document, so that I just want to avoid inconvenience of last minute and stuff like that. Then on Saturday, when we've looked at the topic, then after that, you then try to do it whilst understanding what you'll be doing. And remember, for all written assessments, whatever you get from us, you are supposed to make sure that you do it in your own way and submit your own assessment, which you understand. So that's why I'm saying that whatever I'll send you on Thursday, please put it aside. And then when we have done the class on Saturday, then you go back and then you try to construct your own homework, your own assessment. Right. So I will give you feedback by Thursday in your groups. Right. So today I want to finish off on effects of transactions in foreign currency. Then on Saturday, right, from now on until we write, I think sometime in July, I'm going to give some year modules another rest, like what I did last week. But for you guys, considering that you are writing on the 18th, your rest might be after the assessment. Your rest might be after the assessment. So for you guys, you might not have a rest earlier, like the other guys. So I think up to the time that you're going to write, I will be having 2 classes. One during the week on Tuesdays as usual, and another one either Saturday or Sunday. Another one either Saturday or Sunday. The weekend timetable, it's not sort of permanent, so that's why I say that either Saturday or Sunday, because there are some things that I do. So I will only verify usually on Fridays. So by Friday morning, I will update you. But from now on until you write your test, I think on the 18th of July, if I'm not mistaken, you'll be having 2 classes a week. One on Tuesday, the other one either Saturday or Sunday. For those who miss some of the classes, we will record as usual. All classes will be online. So they will be online. So please, if you miss a class, just hook up with the recording. And if there are any problems, you inbox me, then we can discuss if you are not understanding them. Because we want to try to make sure that by the time that you write, you have one, you have done all topics, and number 2, we have done the revision classes. So I want to quickly move on with the topics from between this week and next week, so that maybe July, most of the time, will be rather we'll be doing comprehensive questions that involve all topics, so that maybe you won't be confused when you write the test. Right. So for today, we want to finish off on intangible assets. I think we did an example on intangible assets, and today we'll do 2 more. Then maybe we'll be fine by then. All right. Remember that intangible assets are all those assets that have got that do not have a physical existence, excluding monetary assets. So we're talking about licenses, we're talking about franchises. When you buy a franchise to run fish and chips, that's an intangible asset. When you acquire a business and there's goodwill, then there's also an intangible asset. Right? Intangible assets are usually amortized over the useful life of the intangible asset. Sometimes it can be according to the contract. For example, you can get a license to manufacture a drug for 5 years. Then you amortize the intangible asset over 5 years. But we also have some intangible assets that have got an indefinite useful life. And these intangible assets are not amortized, but rather they are tested for impairment. Right. Then so intangible assets, whenever there are indications of impairment, just like PPE, we have to test for impairment and see if there is any impairment. And if there is any impairment, we apply IAS36, the same way that we're talking about when we were doing IAS36, right? So when you have intangible assets, you can either use the cost model or the fair value model. This I'm just reminding you, we did all that, right? When you are using the cost model, that means there will be amortization. Then when you are using the revaluation model, that means at the end of each period, you would have to revalue the intangible asset, right? But most of the time, as I said, in this module, we'll be dealing with the cost model. So we'll be using the document that you already have, which I already sent in your groups. So we'll use that document to answer our questions, right? Question 2, part A TikTok Limited company listed on the JSE Limited manufactures and distributes watches to all the major retailers in South Africa. TikTok Limited is the 29th February financial year end. Your year end, as I always say, is very, very important, especially when we are dealing with things like amortization of intangible assets that were bought during the year. You would find that they might not have a full year's amortization, they might be amortized for months. So that's why your year end is very, very important. Right, in this particular case, our year end is 29 February. And from the required, you also have to know the specific year. You don't only need to know the date, you also need the specific year, not only the day and month, right? So then we're told to disclose the intangible assets note for the year ended 29 February 2016, right? So you have to go and read about our intangible assets. Normally, you know that if you are doing the intangible assets notes, you have to identify your intangible assets, internally generated or purchased intangible assets. Then for each intangible assets, you need the carrying amount at the beginning of the year, which will be made up of the cost less accumulated amortization, unless if they are applying the revaluation model. Then you also have to have your additions if there were any intangible assets that were acquired during the year or internally generated during the year. Then you also have to have the amortization for the year. And if there is impairment, you also have to have impairment, right? Then for internally generated intangible assets are those intangible assets that are created by the company. That means we are not buying from outside. For internally generated intangible assets, they are normally made up of two phases: the research and the development phase. And if you still remember from our previous class, research costs are treated as expenses. That is, they are not capitalized, they are not part of the intangible assets. But development costs are the ones that are part of the intangible assets. Actually, development starts when all criteria for recognition as an intangible asset are met. Right. So now let's look at these intangible assets. A license is an intangible asset. Right. On 1 March 2015, TikTok Limited entered into a license agreement with a European company to manufacture and sell the Rush brand of watches. The license was purchased at a cost of £45,000. Right. So this is a purchased intangible asset. This is a purchased intangible asset. And when you purchase an intangible asset, you initially, at initial recognition, you record it at cost. And when you record it, when you buy it in Forex, you have to translate it using the spot rate on the transaction date. That is the date of the agreement, right? And it's valid for a period of 8 years. All risks and rewards associated with the license were transferred to TikTok on the agreement date, right? The transaction date, for the sake of effects of transactions in Forex, which is our next topic, is the date when all risks and rewards are transferred to the buyer. So we're told that all risks and rewards associated with the license were transferred to the buyer on agreement date, and the agreement date is 1 March 2015. So what does that mean? That means the cost, this cost of 45,000 should be translated into rands using the spot rate on the date of the agreement, which is the transaction date. So when you buy an asset in Forex, it can be PPE, it can be an intangible asset. You have to translate it to local currency, to the South African rand. And when you translate it using the spot rate at the transaction date. So you have to see the transaction. The transaction date is normally the date when the risks and rewards are transferred. And in this case, we were told that it was 1 March. So we have to translate it using the spot rate on 1 March. If you can see, our spot rate here on 1 March was 14 Rand. So we're going to translate it at 14 Rand. So our cost of the intangible asset will be 45,000 times 14 Rand. And remember, if there are any other direct costs attributable to the acquisition, such as registration costs, they are also added to the asset, and non-refundable taxes. Right. Legal costs amounting to 15.5 were incurred to finalize the agreement and paid in cash on the agreement date. So that 15,000 will also be added. It's part of the cost, direct cost of acquiring the intangible asset. The license was available for use as intended by management on acquisition date. That is on 1 March. That date is very, very important because we start to amortize the intangible asset on the date that it was available for use. So it is over 8 years, remember. So we'll start to amortize it from 1 March, from the date that it was available already for use. Just like depreciation, an intangible asset is amortized from the date that it becomes available already for use. Right, the license is payable in 2 installments of 20,000 on 31 July and 25,000 on 31 March 2016. How the intangible asset is going to be paid, it does not affect the intangible asset. So that one, it will affect the payable. That is the amount owed, of which we are not interested in that now. We'll be doing that during the weekend. So for now, we are not interested in this, how they pay. So when you are doing the PPE or you're doing the intangible asset, the way in which the payment will be done will not affect your PPE note, will not affect your intangible asset, because the asset is already translated using the spot rate on the transaction date. These payments and stuff like that will affect the trade payables. Right, you should assume that the time value of money related to this is deferred payment is not met. This statement is important because if the time value of money is material, you will have to calculate interest and separate the interest from the cost of the asset. But if they say that the time value of money is not material, then we don't have to look at the time value of money. Right. Then we are told that on 1 January 2016, remember that our financial year is ending on February 2016. So this acquisition happened during the current year. If our year is ending in February 2016, that means it started on 1 March 2015. So this acquisition of the license happened during the current year. Right, on 1 March 2016, a similar license for Rush brand watches was issued to a competitor, resulting in a significant decrease in TikTok Limited sales of these watches. Right, remember from our previous topic, whenever there is doubt on the economic benefits to be derived from the assets, that is an indicator of what possible impairment. So we have to test for impairment. Right, at year end on 29 February 2016, based on market research, the value in use of the license was determined to be 450,000, whilst the fair value and cost to sell the license was determined to be 480,000 and 10,000 respectively. Right. That's it on the license. Right, so this license was acquired during the current year, at the beginning of the current year. So what does that mean? It doesn't have the carrying amount at the beginning of the year. Right, remember that the carrying amount at the beginning of the year refers to the carrying amount of the asset at the end of last year. So only assets that were there from the previous year will have a carrying amount at the beginning of the year. So this license will not have a carrying amount at the beginning of the year. Right, so now we want to deal with our calculations. All right. We have our license, right? Our cost would be made up of two parts: the purchase price plus the legal fees. And the purchase price of £45,000, we are going to exchange it at £1 to the 14 rands. So £1 is 14 rands. So we multiply by 14, and then we add the 15,500, the legal fees. Right. So we're going to say 45,000 multiplied by 14 plus the 15,500. What will you get? Thank you. 645,500. Thank you, guys. Right. Then the amortization during year. Right. Remember that it was available for use on the first day of the financial year. So it will have a full year's amortization. So 645,500. Remember that the useful life is 8 years. The license was for 8 years, yeah. 8 years. And we're not told about any residual value. If there was a residual value, we're also going to take into account the residual value. Right. So what we get is our amortization. Thank you. 8688. Right. Then we get our carrying amount. These are calculations. We're not yet doing the notes. On 29 February 2016, which will be equal to right. But considering that we are told that there is possibility of impairment, we have to test for impairment. For us to test for impairment, we compare our carrying amount to our recoverable amount. We compare our carrying amount to our recoverable amount. Right. Now, our recoverable amount, we know that is the higher of the value in use, which we are given. The value in use is 450,000. Yeah. The value in use was determined to be 450,000. So it's 450,000, right? Then our fair value less cost to sell. Right. We are told that our fair value of the intangible assets is 480. The fair value here, the fair value and cost to sell will determine to be 480 and 10,000. So that will be 480,000 minus 10,000, which is equal to what? 470,000. Right. Now we know
sorry,
that
Eugene.
Yes.
Why are you subtracting the 10,000?
It's fair value less cost to sell. The fair value is 480, cost to sell is 10,000. Read here.
Oh, okay. Thank you.
Right. Our fair value is 480. Then there is cost and cost to sell at 10,000 respectively. Is that right? So when we are testing for impairment, to get our recoverable amount, we have to get the higher of the value in use and the fair value less cost to sell. Is that right? Does that answer you, my sister?
Yes, it does. Thank you very much.
Okay, right. So your recoverable amount, my friends, is the higher of the value in use and the fair value less cost to sell. So that means our recoverable amount, the higher, is the what? Is the fair value less cost to sell. as you can see, that is 470, whilst the value in use is 450. So our recoverable amount would be 470. So now it's 470. Then we know that there is impairment if the recoverable amount is less than the carrying amount. There is impairment if the recoverable amount is less than the carrying amount. So in this case, we have impairment because our recoverable amount of 470 is less than the carrying amount of 564. So there's an impairment loss during year, right? Which would be 94,812. So when we say impairment loss, we're trying to say our carrying amount of the intangible asset is overvalued because it's a carrying amount in our books is 564, but the money that we can generate from it is only 470. So it doesn't make sense for us to say it's worth 564 when it can only generate for 470. So we have to write it down to the 470. That's what we call impairment from our previous topic. Right. Someone can ask, how about if the recoverable amount is more than the carrying amount? You don't have to do anything. If the recoverable amount is more than the carrying amount, there is no gain. You don't have to record anything. You don't have to record the impairment. So as long as your recoverable amount is more than the carrying amount, no records will be made. Unless if there was a previous impairment recognized in the previous years, then we might have to reverse it. But as long as there was no previous impairment and the recoverable amount is more than the what carrying amount, then you don't have to make any records. You don't have to do any calculations. So these are the calculations that we need regarding the license. Before I proceed, any questions on the license? No questions. Right. Then we'll go to the prototype. TikTok Limited identified the need for a smartwatch with an extended battery life and embarked on a research project to manufacture a prototype battery with an extended battery life for their smartwatches. Remember that whenever you are in the research phase, when you are researching, we don't consider the intangible asset. It is not recognized by then. All research costs are considered as expenses. They are not part of the intangible asset. Remember that. Why is it like that? It is because of our conceptual framework of financial reporting, which defines an asset as a present economic resource. Is that right? So when you are still on the research phase, there are no economic resources to be derived. So we're not yet sure if you're going to go on. Remember, when you do research, your research might indicate that no, there's no need for us to do it, or there's a need to do it. So that's why we say the research phase is an expense. Why? Because by that time, we're not sure that we're going to go on and develop the intangible asset. So the development phase, when we're now happy and we have the resources, I think I discussed the criteria last week, then that's when we now recognize the intangible asset. All right. On 1 April, research on the project commenced. And on 1 August, all the criteria for the recognition as an internally generated intangible asset was met. Development of the prototype battery was completed on 31 December 2015. All right. So my friends, from 1 April 2015 up to 1 August 2015, that's the research phase. All expenditure during that period will be taken as an expense. Research. And I'm not going to deal with that today. You can refer to our question for last week, whereby I showed you how to deal with research. Right. Then from 1 August 2019 up to 31 December 2015, that's the development phase now. So this is the expenditure that will then recognize as part of the cost of the intangible asset. So the development phase expenditure is the expenditure that will be recognized as the cost of the intangible asset. And only directly attributable costs. We don't include things like that, admin costs and stuff like that, unless if they say they are directly attributable. Right, the following directly attributable costs were evenly incurred during the research and development phase of the prototype battery. So you should be very careful. These were evenly incurred during the research and development. So this expenditure that they are talking about is for both the research and the development period. So we are only going to deal with the development. We will not deal with the research for this question. But if you were doing if they were asked you to do the profit before tax, you also calculate the research cost because they will have to be disclosed there. Right. So we know that our period of research and development was from 1 April to December was 9 months. 1 April 2015 to December was 9 months research and development. And out of those 9 months, 1 April to 1 August, which is 4 months, was for a research. We don't count August because by 1 August they started development. So April to July, April, May, June, July, 4 months were for research, and 5 months, August, September, October, November, December, were for development. So when we allocate these costs, since they were incurred evenly, when they say they were incurred evenly, that means they're the same per month. So we proportion them according to the months. 4 months for research, 5 months for development. So now when we calculate our intangible assets, our prototype, when we calculate the cost, we would say right, we're going to say our direct overheads, this 94,500, direct overheads, we're going to say 94,500 multiplied by 5 divided by 9. My 5 is the development months, August to December, and my 9 is the total months from April to December. That is both the research and development. So remember that I said today we're not going to do the research part. So refer to our last week's class to see how we treat the research. What do we get here? Thank you. Right. Then we have got next, we do the same again for raw materials. We do the same. What do you get? 11,250. Right, the other 4 months will be part of research. Right, then we are told that an engineer earning a monthly salary of 60,000 was appointed to work full-time on the research and development. An engineer worked full-time on the research and development. So we're not interested in the research part. We're only interested in the development. Now you should see the difference between this expenditure. It was the total for the 9 months, but here we're told that this is a monthly salary. So the 60,000 is per month, right? So we would say the engineer salary, $60,000 multiplied by 5, the number of months that we that are for that will be 300,000. Thank you. Right. Then on 1 January, the prototype was available for use as intended by management. So that means our amortization will only be for 2 months. Remember, our year is ending in February 2016. As intended by management, an estimated useful life of 5 years and a residual value of 50,000 was allocated to it. There's a residual value of 50,000 and a useful life of 5 years. The policies, actually, I made an error here. Always, although it doesn't affect our answer, please don't do the error that I did to just answer and do everything without reading the policy. Always first, whether you are dealing with PPE or intangible assets, read your policy first. In this case, it doesn't affect me, but it could have affected you. Then maybe you then see that later they say that they use the revaluation model when you were using the cost model. So they say the following is an extract from the accounting policies of TikTok Limited. Intangible assets are accounted for in accordance with the cost model, which is what we're following. Amortization is written off in accordance with the straight line method over the assets' estimated useful lives, which is what we did. So fortunately, it didn't affect anything. But please don't make this error. Always, before you answer your question, go to the accounting policies so that you understand how they are treating the intangible asset. Right. So we're saying on 1 January, it was available for use. So now we can determine the cost first. So our cost of the intangible asset would be equal to the total of these costs that I have here. Right. Then we'll have our amortization during here. Right. I want you to understand about 3 things that we have here. Number one, this asset was available for use on 1 January. So it will only have amortization for 2 months, January and February, since our year is ending in February. Number two, the useful life is 5 years. So the amortization will be spread over 5 years. Number three, there's a residual value of 50,000, which has to be subtracted. All right, so we're going to say our amortization would be equal to 363, the cost that we calculated above, minus our residual value, which is 50,000. Then we divide by the useful life, which is 5 years. Then we multiply by 2 for the 2 months that the asset was available for use over 12. What do we get? Thank you. 10,458. Right, then we get our carrying amount. Here we don't have any issues with impairment. So we'll have our carrying amount on 29 February 2016. Right. Any questions on the prototype? Right. Then we'll do our notes, extract of the notes, the financial statements, of TikTok Limited. But the year ended right. Internally generated purchased. I have to correct here. The internally generated is the prototype. It's not always that you have to write, because you might have 5 internally generated intangible assets. You can just bunch them. You don't have to put them one by one. But here, since it's one, that's why I've just I just did what I did here. All right. So then we have our carrying amount at the beginning of here. Remember that the internally generated and the purchased both, they were only purchased during the current year. Right. It is made up of cost and the accumulated depreciation. Right. Then we have our additions during year. The internally generated, the cost was 363, and the purchased license, the cost was 645. So I'm just taking this cost here, my friends. The purchase, this one that we calculated here, and the internally generated, this one, this 363,750. That's where I got these figures here. Right, then amortization during year, which also take from our calculations that we did already. Right, the internally generated, we calculated it here, the 10,000. And the purchased, we calculated it here, the 80,688. Right. Then we also had, for the purchase, we had impairment during year, only for the purchase, which we calculated here. This 94. Right. So impairment will also have its own line item. Then we can get our carrying amount at end of year, which will be made up of them cost and accumulated amortization. Sorry, can I please correct what I wrote up there? I wrote depreciation there. Remember that for intangible assets, we don't call it depreciation here. It's supposed to be amortization. Right, our cost, remember that it's the 363, and the other one is 645. Then our accumulated, we can say accumulated amortization and impairment. Here it is the 10, and here it is the 80 plus the 94. Then we get our difference. as I said last week, you can separate your amortization from your impairment. You can say accumulated amortization, then you do another line where you say accumulated impairment. Right. So then you are supposed to state the carrying amounts and the remaining useful lives. Right. We know that our prototype, it is a useful life of 5 years and 2 months had already gone. Remember that it was available for use from 1 January 2016. So out of the 5 years, 2 months are the ones that are gone. So we're left with 4 years and 10 months. So you can say the prototype is a carrying amount of 353, 292, and a remaining useful life of 4 years, 10 months, end of year. So the 4 years, 10 months is coming from the fact that the full useful life was 5 years. But out of those 5 years, 2 months have already gone. So we're just taking out 2 months from the 5 years. Then for the license, remember that it had a useful life of 8 years. And out of those 8 years, exactly 1 year is gone. So we can say the license is a carrying amount of 470,000 and a remaining useful life of 7 years at year end. Right. Sometimes you can even also write about the impairment. That in impairment loss of a 94,812 was recognized during the year, and it was presented under the expenses in the profit or loss section of the statement of profit or loss and other comprehensive income. But sometimes it is recorded on a separate note of the impairment loss. Right. At this stage, I would invite any questions on what I've done so far. No questions. So if we have no questions, I'll do this at the last question. Right. After doing this question, then you can always try other questions. Check maybe the ones that are in your study guides and stuff like that to see how you can be able to maneuver around. Right. Skota Limited is a manufacturing company situated in Rustenburg. The company is a 31 December reporting date. The following details regarding the assets of the company are available. We have the flame hot formula. On 1 June 2015, okay, let me just go and read the other information. Right. Disclose the following notes to the annual financial statements of Skota for the year ended 31 December 2015. Our year end is 31 December 2015. Right. Total column not required. So I will not do, I've done the total column on 2 questions. So that there's no need, you now know how to do the total column. So there's no need for me to do it. Then please, I said you should always read this additional information, but of course we know that we expect it to be the same always. The following is an extract from the accounting policies of Skota Limited. Machinery and intangible assets are accounted for in accordance with the cost model. So there's no revaluation. It's costless for machinery, costless depreciation for intangible assets, is costless amortization. Right. Depreciation on machinery and amortization on intangible assets are written off in accordance with the straight line method over the assets estimated useful lives. Right. So allocate over the estimated useful lives. Right, so let's go and do our calculations. First, we've got the flow mode formula. On 1 June 2015, which was during this current year, Scota Limited signed an agreement with an Australian company to acquire a formula at a cost of 30,000 Australian dollar to manufacture charcoal with an increased heat retention ability. All the risks and rewards associated with the formula were transferred to Scota Limited on the date of the agreement. That is 1 June 2015. That means that's the transaction date. And the formula was available for use as intended by management on this date. The cost price of the formula is payable in full on 31 January 2016. We're not worried about the payment. The formula has an estimated useful life of 25 years, and the residual value of new was allocated to the formula. All right, so that means our cost would be the 30,000 times the spot rate on 1 June 2015, which is 8 Rand 25. All right, so we're going to say question 3. We have the flame. What's formula? Right, our cost will translate it using the spot rate on acquisition date. So we're going to say the 30,000 Australian dollar times the spot rate on that date, which was 8 Rand 25. What do we get? Thank you, guys. 247,500. Right. Then amortization during year. Now there are various issues that we have to understand. Our year is ending in December 2015, and this was acquired on 1 June. So our amortization is only going to be for 7 months. For 7 months from June up to December, 7 months. Right. Then the useful life is 25 years, and the residual value is 0. So we're going to say 247,500 divided by 25 years multiplied by 7 months divided by 12. What do you get? $5,775. Thank you, guys. Then we get our carrying amount. 31 December, which is our year end. Any questions on the formula? But remember that if we have they were purchased from the previous year, we would have calculated the carrying amount at the beginning of the year. Right. Then we'll move on to the next one. Quick Ignite formula. On 1 February 2015, which was this year, Scota Limited commenced with research to develop a formula to manufacture self-ignite charcoal, which will burn without using fire lighters at all. On 1 July 2015, the directors of Scota Limited determined that all the criteria for the recognition of an internally generated intangible asset were satisfied, and the development of the formula commenced. On 30 September 2015, the development of the formula was completed. So that means from 1 February 2015 to 1 July 2015, that's a research, which is about 5 months, February to June. We can't count July because by the 1st, all criteria had been met. So February to June is 5 months. Then the development is from July until September, which is 3 months. So there's 5 months for research expenditure during that period will be expensed, and then 3 months for development, which will be capitalized. Right, the following costs are directly attributable to the formula and were incurred evenly from 1 February 2015 until 30 September 2015. So these ones, if they were incurred evenly, remember, we have to separate them into the 5 months for research and the 3 months for development. So we're only interested in the 3 months for development. Right, so we have got the quick ignite formula. We first have to calculate our costs. Right. So we have got these ones, the consumables and the electricity, which were incurred evenly. We're only interested in the cost for 3 months. So we'd say consumables which will be 350,000 multiplied by 3 months over 8 months. What do we get? $131,250. Thank you. Then electricity. We have 134,000 multiplied by 3 over 8. $50,250. Right. Then 4 scientists were involved during the research and development of the formula. There are 4 scientists here. 3 of these scientists are permanent employees of the company and worked full time on the project throughout the research and development phase of the formula. An additional scientist, temporarily employed on a contract basis, worked full time on the formula from 1 May 2015 until 30 August 2015. So the temporary one only worked from May. A permanently employed scientist earns a monthly salary of 40,000, whilst a temporary employed scientist's salary amounts to 35,000. So 4 scientists, we've got 3 permanent. Right. 3 scientists, 3 permanent scientist salaries. I want you to follow me here. Right. These are 3 people, so that's why I'm saying 3 here. Because we're given their salary per scientist, I want you to see here so that you don't get confused. So you should be very careful because they can give you the total salary for all the 3. But here they said that a permanently employed scientist, that means 1, earns a monthly salary of 40,000. And remember that we're interested in these guys. They worked throughout the research and development phase. So that means for the whole 3 months of development, which we are interested in, they were working. So say 3 for the number of employees times 40,000 per month, then times 3 for the number of months. So the first 3 is for the number of scientists, and the other 3 is for the number of months. Remember that our development months are 3. Right, what do we get? I think we get 360. Correct me if I'm wrong there. Thank you so much. Right, then we have got a temporary scientist. We have to be very careful with this guy now. Why? He didn't work until the end of the development phase. We are told that he only worked, this temporary scientist only worked from 1 May 2015 until 30 August. And let's not forget that our development phase only started in July. So we are only going to take July and August, 2 months. So that means you was earning 35,000 per month, and you only worked for 2 months of the development phase. So we'd say 35,000 times 2 months, which is 70,000. If the other month of May was going to be recorded, the May and June were going to be recorded under the research if we needed to account for the research cost. Right. Any questions there? Then on 30 May 2015, Scota Limited purchased a specialized machine at a cost of 3 million to be used for all research and development projects, including the quick ignite formula. The machine was available for use as intended by management on acquisition date. The machine had an estimated useful life of 10 years, and the residual value of new was allocated to the machine. Right, remember that when you use one asset to manufacture another asset, any depreciation of that asset during that period that you are using it to manufacture another asset will not be expensed, but it will be capitalized to the asset being manufactured. So when you use one asset to manufacture another, the depreciation of the used asset during that period will be added to the cost of the asset being manufactured. So that means the depreciation of the machines for that period that they were used in the development of Quick Ignite will be added to the cost of the Quick Ignite. So now we know that the cost was 3 million, and the development of Quick Ignite was for three months. The June will go to the research costs, but from July until September, the 3 months of the development, that depreciation is the one that we need. Remember that depreciation is provided over 10 years, and the residual value is nil. So we're going to say depreciation of machine machinery, which is 3 million. There is no residual value, divided by 10, then multiplied by the months of the development, which is 3 months. This one, remember, I'm not saying 3/8, because the depreciation, when we divide by 10, it's an annual depreciation. That is for 12 months. So what do we get? Thank you so much, 75,000. Right. Then on 30 September, the formula was available for use as intended by management. That means from 30 September, that's when we provide for amortization. So that means our amortization will only be for 3 months, October, November, December. I don't count September because it was available for use at the end of September, 30 September. So actually we didn't utilize it in September. So our amortization will be from October up to December. So it was estimated that the formula can be used for 15 years and no residual value had been allocated to the formula. Right, but we need to read the further information. Due to insufficient funds to finance the research and development division, management made a strategic decision on 20 December to sell this division. On 31 December 2015, that is at the end of the year, all the criteria to classify the research and development division as held for sale is stipulated if it's 5 non-current assets held for sale and discontinued operations were made. Right, at least the criteria was met at the end. Remember that an asset is depreciated or amortized up to the date that the criteria is made for classification as held for sale. So we're only going to provide the amortization up to 31 December. Fortunately, it's the end of the year. That is from October. That is for 3 months. So we have our amortization here. Sorry, before we calculate our amortization, we have to calculate our total cost. All right, then amortization during year. Which is 686,500 divided by 15 years times 3. Remember, it was only ready for use on 30 September. So the 3 months, it's October. These are not the development months. That is from the day that it was available for use to the end of the year when it was held for sale. That means October, November, December. What do we get? Thank you. 11,442. Right. Then we get our final answer would be the transfer to non-current assets held for sale. Right. Remember, NCAHFS stands for non-current assets held for sale. It is an abbreviation that you are even allowed to use. When an asset, when the appropriate level of management is decided to sell an asset, that asset will be removed from property plant, from whatever category it is, and transferred to non-current assets held for sale. Any questions on the calculations of the quick ignite formula? Right. They talked about
Hi, Eugene.
the fair value
Sorry,
and stuff like
Eugene,
that.
I just want to find out.
Yes.
I want to find out what is the difference with this one that we're calling it the non-current held for sale instead of just a carrying amount?
Because the asset is met all criteria for classification as held for sale.
Oh, okay.
So we're removing it from intangible asset. It's no longer an intangible asset. It's now accounted for in terms of IFRS 5, non-current assets held for sale. Whenever the company has made a commitment to sell an asset and they are just waiting for a buyer, from that date, it will no longer, it will be moved from its classification to non-current assets held for sale.
All right, thank you.
Right. Then this thing about the fair value less cost to sell, that will be done under the non-current assets held for sale. And I remember that I'm going to look at that with you at a later stage after doing the effects of transactions in foreign currency, because I need you to do your assignment. Right. So then what will we get here? So here we'll then do our extract of the notes, the financial statements of Scota Limited for the year ended 31 December 2015. Right. We have the purchased intangible assets, which is the flame hot formula. Then the internally generated intangible assets, which is the quick ignite formula. We have our carrying amount at the beginning of year. Which is 0. I'm not doing the total this time around. Which is made up of the costs and accumulated amortization, which was also 0, considering that this intangible asset was only acquired during the year, and the one which was internally generated was also generated during the current year. I'm not doing the total this time around. You just add there. Right. Then additions during year. Right. For the purchased, that will be the cost that we translated from Australian dollar, which is the 247. For the internally generated, that will be the total cost that we calculated here, the 686,500. Right. Then we'll have our amortization during year. For the purchased, we know that our amortization is 5775. For the internally generated, our amortization is 11442. Then we'll have our transfer to non-current assets held for sale. Right, whenever the appropriate level of management have made a decision to sell an asset, you will have to transfer that asset or remove it from the category where it is. Like in this case, we have to remove it from intangible assets and transfer it to non-current assets held for sale, according which are accounted for in terms of IFRS 5. Right. Then we get our carrying amount at end of year. Which is made up of the cost and accumulated depreciation. Right, our cost for this one would be the 247. And our accumulated amortization is this one here. Right. The quick ignite, by transferring it to non-current assets held for sale, that means it's no longer part of intangible assets. So it will be 0.
Sorry,
Yes.
you wrote accumulated depreciation.
Thank you so much. Amortization. Just use the 2 PPE. Right. So this one, the fact that we've transferred it to non-current assets held for sale, that means it's no longer part of the intangible asset. When an asset is transferred to a non-current assets held for sale, it will no longer be part of intangible assets. So we then get our carrying amount, which we've already calculated anyway. All right. So we only have the flame hot formula. Right. Our flame hot formula, remember that its useful life was 25 years. And during the current year, 7 months it passed. 7 months it passed here. Remember, our 7 months, they are coming from the fact that our flame hot formula was available for use as from 1 June. 1 June to 31 December, that's 7 months. So 7 months from the 25 years they've gone. Right. So we can say that the flame hot formula is a carrying amount of 241,725 and remaining useful life of 24 years and 7 months and 5 months, sorry, 7 have gone, so we are left with 5 in the first term at end of year. We don't have to write anything about the quick ignite because it's no longer part of the internally generated intangible assets. We only talk about those assets which are still falling under the intangible assets. Those are the ones that you have to give the description there. So if an asset is transferred to non-current assets held for sale, or if it has been retired, or if it has been disposed or derecognized, we don't have to write about it. Any questions? No questions. Okay, so if we don't have any questions, we'll meet during the weekend when we deal with effects of transactions in foreign currency. Then please, around Thursday, I'll give you your feedback in your groups on the assessment that you'll be doing. But please don't do it. Wait for the class so that you then submit an assignment that you understand. I usually want you to submit what you understand. Thank you so much. Enjoy your day and God bless you richly.